Sasan, I want to talk a lot about this acquisition, but first, given what's been happening in the markets, got to ask you about that. Intuit has really unprecedented insight into small and medium business activity, and I'm wondering at this point, given what we saw with the phase one trade deal with China over the past several weeks, given what we're seeing now with coronavirus, have you seen notable changes in business activity because of that?
You know, we continue to see strength. There's a few things that we look at. It's our charge volume, whether or not consumers are spending with small businesses. It's payroll data, and then the lending that we do. And across the board, we're continuing to see strength and no changes.
Wow, okay. To talk about this deal now, by my count, by far the biggest ever. Demand force was less than $500 million. This is 14, 15 times bigger, nearly 10% of your market cap, and yet the stock is still up. Did you go to large investors beforehand and explain this to them? Because, I mean, I know your earnings were good and all, but this is a big purchase for investors to be backing you this morning.
Yeah, I tell you, we could not be more excited about the partnership with Credit Karma. We did not go to investors ahead of time. I think everyone sees that this is an opportunity to grow our TAM. It's a strategic fit. We're acquiring a company that's accretive to the company's growth, and there are things we're going to be able to do together for consumers that I think are going to be absolutely remarkable and power the economy. So I think that's the excitement that's showing up in the stock.
Correct me if I get any of this wrong, Sasan, but Credit Karma had nearly $1 billion in revenue last year, growing 20%, which is about twice as fast as Intuit's existing consumer group. You're paying a little more than 7 times revenue, and you say this is going to be non-GAAP accretive to earnings in the first full fiscal year of closing. That suggests to me that Credit Karma was your #1 challenger in the consumer space. Given what's happening right now with lawmakers and regulators concerned that innovation is being stifled by big companies buying smaller ones, why is this not that?
You know, we set a goal for the company about a year ago to double household savings for anyone that's on our platform. And in the United States today, that's 7%. And we've set a bold goal by 2025 that we want to take that to 14%. And really what this combination does is it allows us to create a financial assistant in the pocket of consumers. It puts the power of their data in their hands and creates much more choice and actually much more competition. And so what that means is now that they have their spending data, their income data, their credit history, and their life situations in their hands, now they can get pre-approved for car loans, home loans, personal loans. And then going beyond that and getting the best credit card rates, savings accounts, getting early access to their paycheck money. So this is really about creating choice for consumers and helping them save money. And we just think that's nothing but upside for consumers. And ultimately, it could continue to power the economy.
I gotcha. Let me come at that another way. You mentioned data. Intuit already has a ton of it. What is your promise about, with this combination especially, how that data will be used, how it will be shared between existing Intuit and Credit Karma, in case anybody's got concerns about that sort of thing?
Yeah, it's a great question. You know, long before we started talking about data and privacy, 10 plus years ago, we set in place data stewardship principles. And the principles are, it's the customer's data, not ours. We do not sell their data, and we only use their data for their benefit with their consent. And so that is ever more so important today. And one of the many things we love about Credit Karma is they take customers' data and privacy very seriously. So the combination of those two elements around data stewardship principles is actually why we have such incredibly trusted brands in the marketplace. And we continue to focus on doubling down on that as we look ahead.
Speaking of Credit Karma, let's bring in Ken Lin. Ken, good to see you. You started Credit Karma in 2007, a year after Mint started. Intuit bought that in 2009 for $170 million. You're getting 41 times what Mint got. I don't know if you want to talk patience, adaptability. What's the lesson for entrepreneurs here?
I think it's certainly around doing something that's important. And for us, it's about mission and grit and going after that mission and doing the right thing. I think it's important to, build a company that has a goal. And for us, it was never about an IPO, never about getting sold, but doing something and fulfilling a consumer promise, and I think that's a success. I think if you have a North Star that orients to something that's meaningful, eventually good things happen.
You say the goal wasn't an IPO, Ken. You're getting $7.1 billion, half cash, half stock, but I'm sitting on the floor of the New York Stock Exchange where a lot of people are going to see this as one that got away. Bill.com went public here at about half the valuation that you're getting here. Why not go public?
Well, again, for us, as a company that's focused on a mission, we always said the IPO was a tool in terms of helping consumers benefit. And, we didn't need the capital. And at the end of the day, the partnership with Intuit, our ability to help consumers and the data and that it'll create, that was the most meaningful thing. And that's what gets excited.
Well, speaking of the future, talk to me about artificial intelligence. Sasan has talked a lot about that, not just within TurboTax, but across the whole consumer mission on how that's going to benefit consumers, pull things forward. What conversations have you guys had about AI and how that's going to grow in this combined effort to benefit your users?
Yeah, well, if you take a look at how banks are using artificial intelligence modeling, really consumers are at a disadvantage, right? There are so many variables that go into the determination of what products people qualify for. It's very hard for consumers to understand what is best for them. And I think between the combination of Intuit and Credit Karma, what we will be able to do is provide consumers with real certainty on which products they qualify for. We'll be able to simplify the application process. And we'll be able to remove a lot of the friction that keeps people from doing the right thing for their finances. And I think that's the opportunity here.